All right, this is the weekly coffee futures video for the week of Tuesday, September 3rd, right on the heels of Labor Day weekend. There's a lot of charts here you can see. I'll be showing you some of these in a moment. Let's take a quick look, though, at the newsletter itself. We're sort of, last week's settlement was right in the vicinity of a channel top in the 96 handle, so it was inconclusive. This week, well, Tuesday, we've backed off a bit. So here's what I've got. We've got, and I'll show you this in a moment, support in the 93 handle, resistance in the 97 handle. The market really doesn't tip its hand into later September until we settle outside that region. So if we hold inside that area this entire week, we come into next week sort of inconclusive. That 97.10 is a descending one-third speed line, though, and it is dropping at a pretty good clip. So even if we don't close above it this week, we might gap or open above it next week, and it may be bullish. I'll get to that in next week's video. But for right now, you've got a 93.10 to 97.85 range, both of which are able to contain weekly activity. I've got I've got a couple other levels, 97.85, 93.7. You can see them in the support and resistance area here on the right. And if we settled above 97.85, not only is it above that one-third speed line, but also above the high of the low on the December chart. And that should spark follow-through buying. I think we could get 3 to 5 weeks recovery into the 108.20 area, which is the descending two-third speed line. Whether or not we make it all the way into the let's take a look at the 111 handle, primary long-term resistance, or all the way up into the 115 handle long-term resistance is really open for debate. I think, though, if we do close this week above 97.85, 103.30, likely within 1 to 2 weeks, the 3 to 5 weeks in reach of 108.20, I should probably beef this up to a multi-week containment level, but for right now I'm going to leave it alone as a weekly containment level. It would become a target by some point in October if we close this week above 97.85. Now 93.10 to 93.70, let's take a look at that. Bear with me here for just a moment. There's 93.70, nothing more than the move low. This is also the December chart. So there's 93.70. And let's take a look at, let me hunt 93.10 down. This is it, yes. This former channel structure. And it is at 93.10. So you've got 93.10 and 93.70. I do think if we close below 93.70, even if we don't close below 93.10, that would be a pretty decent sign of weakness into later September. But I'm just going to throw this range out there as one that we do need to settle below for setting off a bearish follow-through into what remains kind of a big picture objective in the 83 handle. Let's take a look at that. We've got this channel structure at 83.60. That has been something I've been talking about for a couple of months now since we tested long-term resistance in at this channel top, and then there was other here. Let me just show you. Really, it was this 111.25. At the time, we were in the 114 handle resistance. Holding below this area still allows continued descent into the 83 handle over the coming weeks. So if we close below 93.10, 93.70 this week, then I think we'll get some bearish acceleration the next 3 to 5 weeks, likely to yield this 83.60 area where we can actually put out an annual low. So let me summarize here for the week. If we close Friday above 97.85, 108.20 expected within 3 to 5 weeks. If we close below 93.10, this 83 handle expected over the same time horizon. And this is really kind of a long-term target anyway, below the 111 handle long-term resistance. I do believe that's all that needs to be said for this week's coffee video.